All right. All right, guys, on to our training, guys. It's important I give you guys an announcement, but it's also important that I give you guys training, okay? I'd like to present to you one of our very own VPs that I've known for several years now. This is a VP that has extensive knowledge in the industry, 50 plus years in the industry. 50 plus years in the industry, family comes from the industry. This is an individual that he'll talk to you about how the industry used to be. We used to walk around with this huge binder with a bunch of numbers on there. When you wanted to run quotes, you had to mail in policies. Can you imagine paper applications that you couldn't fax, you couldn't email, you had to physically mail them into the carriers? Can you imagine that entire process the way that it was? I think they called it debits back then. I wasn't around for that kind. I was around for the paper app, but I wasn't around for that. But he's got an extensive knowledge in something that, in my opinion, a lot of you guys are leaving on the table. If you work the final expense business and you don't know about life settlements, you have no idea what you're leaving on the table. You have absolutely no idea what you're leaving on the table. So here's what I want you to do. I want you to get yourself stationary. I want you to take a notepad and pen. I want you to make sure you're muted and take as many notes as you can, because if you're a final expense agent, this is an opportunity for you to find $5,000, $6,000, $7,000 commissionable type products through what we call life settlements. And the person that's going to be training today is none other than Mr. Mike D'Amico. Mike, can you hear me, brother?
I can hear you, brother. Thank you.
I love it. I'm going to give you screen sharing ability, my friend. And
well, wait a minute. Don't bother, because my computer's down. I'm actually transmitting from my phone right now.
Okay, no problem. Go for it.
So I wasn't going to miss this opportunity. So first of all, I want to thank everybody for being here. Some of the VPs I've been communicating with over the weekend, so thank you for being here. All the associates, again, thank you. I'm going to tell you a quick story. I don't think Tony even knows this one. Up until 2010, and it's only because I haven't been in the market, so I haven't kept up with the statistics, I had made the largest single purchased life settlement portfolio in the industry. One afternoon, I purchased $1 billion for a premium of $110 million. It shook the industry so much that 48 hours later, I got a phone call from Cantor Fitzgerald. And if you're not in investments, you may not recognize the name, but they're one of the largest investment houses in New York City. Vice President of Derivatives called me up to ask me how I did it, because not only was it the largest purchase, it had never been done before. Nobody had ever purchased that many on one day. So someday I'll tell you the rest of the story, because it's long, boring, but just to let you know, I have some background in life settlements, to say the least. So again, thank you for being here. What is a life settlement? Let's start very basic. Life settlement is a transfer of the ownership of an enforced life insurance policy from the current owner insured to an investor. It's that simple. It's a third party owner of a life insurance policy. You will hear a lot of things around the industry, well, you can't do that. It's illegal. It's illegal because you have to have an insurable interest to be a beneficiary on a life insurance policy. Well, here's the problem that we don't tell new agents. That's not really true. What is true, when you write a policy at issue, beneficiaries have to have an insurable interest. The day after a policy is issued, the insured could name their cat. And that's really the basis for a life settlement, is that anybody can be a beneficiary after a policy is issued. And as far as is it legal, way back in ancient history, I wasn't there, but I was close to it. December 4th, 1911, one of our greatest Supreme Court judges, a gentleman by the name of Oliver Wendell Holmes Jr., wrote the majority opinion for the Supreme Court, stating two very important points that affect life settlements. Number one, life insurance is a personal asset. You own a life insurance policy the same as you own your car. And modifying the definition of beneficiary to include anybody you want to name after the original issue. So it is legal, it does exist, and it's one of the best kept secrets of our industry. And you may say, well, why is it kept a secret? Well, as you will find out if you've been in this industry, the smartest people in this industry are like the people on this call. The dumbest people in this industry are the people in home office. Now, people will get mad when I say that, but believe me, I can prove my point. Most home offices preach that life settlements could kill our industry. And the reason they say that is because if somebody turns a life insurance policy into a life settlement, it can't lapse. And one of the best kept secrets, one of the dirty little secrets of our industry, insurance companies make a whole lot of money on lapse. There are companies that do everything they can to help encourage clients to lapse their contracts. Now, you may never experience that, and that's fine, because at the end of the industry we're at, we're just the opposite. We don't like lapse. But some home offices do. Now, they're wrong. They're wrong, and I won't get into all the technical part of it because there's only about 5 reinsurers in the whole world. Anytime you write a life policy, let's say you write it with Allianz, Allianz only retains about 10% of the face value of that insurance policy. They sell it to reinsurers. Well, those 5 or 6 reinsurers have every single insurance policy in the world in their portfolio. So it doesn't matter to the original writing company whether a policy stays in force forever or not. But again, very technical, don't want to get into that too much. I'll be glad to do that on an individual basis. So why buy a life settlement? Well, it's real simple. There's a word in investments called arbitrage. And if you've never heard it before, one example of it is a life settlement. So someone buys a life settlement, they buy the life insurance policy I have on my own life. I don't want it anymore, it doesn't matter why. I sell it to an investor and they keep it. They'll pay me a certain amount of money for that, and we'll get into that a little bit more in a minute. Plus, they have to keep the policy up. They have to pay the premiums, plus any fees to transfer it, and there are other fees built into the process. Now, if they buy that policy today, and I go out and wrap my car around a telephone pole and don't get home, they get paid. So the arbitrage in that case could be 60 or 70% of the face value of the policy. Because if they buy it and they only hold it for a few days and something happens to the insured, they get the full value. In reality, most life settlements will go on for a period of time, and depending on how long they go on, dictates what the arbitrage will be. In other words, what will be the percent of return to the investor. So people that understand that are buying up life settlements, and they're not explaining it to other people. One of the few people that actually explains it, and he's so good nobody even listens to him, is a young guy by the name of Warren Buffett. The last white paper I read by Warren, he owned over $3 billion of life settlements. And when he asked why did he buy that many life settlements, he says that's how Berkshire Hathaway, which is his earn in the country every year. And you may scratch your head and say, well, wait a minute, I don't understand that. Well, in a market where sometimes single-digit interest and single-digit return sounds really, really, really good, on his $3 billion of life settlements, he's averaging over 17% a year. And he's attributed that to the fact that he can buy up stocks that most people won't buy, and he puts them in what he calls his nursery. So he'll buy a stock like GE. When GE was really, really bad, nobody wanted to touch it. He went out and bought millions of dollars of GE because he doesn't need to sell it. Because the return on life settlements are so high, he's going to hold that stock until GE is worth something like it used to be. So life settlements are being used behind the scenes. They just don't bother telling you about them. The other reason that you don't know anything about them is every major insurance company, and they will deny this, by the way, has a division to find out how to buy life settlements of other insurance companies and not let people buy theirs. Again, going back to the idea that they don't want the policy to be left on the books forever until someone actually dies. So there's a lot of misinformation, but the facts are quite simple. It's legal, very simple to do. Now, the biggest thing in life settlements is something called LE, life expectancy, which just like it sounds, simply means how long will the insured person live? Well, the sweet spot in LEs is 60 months. So somebody who's got 60 months to live is the LE that's favored in the life settlement industry. That's the one that everybody wants to buy. Why is that? Well, it's real easy to show what it's going to be worth compared to what the client has to pay. And there are now people who I've worked with, a guy by the name of Mike Fasciano out of Maryland, as a matter of fact, who are 98 percentile accurate on their life settlements. And how they come up with an LE is the complete reversal of underwriting when you write a life policy, because they're not looking for, you know, how the health is and if it's good. They're looking how the health is and how bad is it. Your best life settlement client is someone that will die in the next 24 months and wants to sell his life policy, because he would have an LE of 24 months. So it's a reverse underwriting from what you're used to when you write a life policy. It doesn't matter why the insured wants to give up the policy. And there's many different categories. And by the way, the video that Tony mentioned, I watched him record it, is fantastic. And he talks, not to steal his thunder, he very simply, he shows you how to take a $1, $2, or maybe $5 lead for final expense, not only write the final expense, but turn around and sell a life settlement. And the life settlement could return 5 to 10 times as much commission as you made on the final expense. So watch that video. Tony did a great job on it. But that's not the only place you can find need for life settlements. Any executive who retires from a major corporation and had a deferred comp plan or some sort of insurance perk plan, their policies, a lot of times, they don't want to carry. The premiums are pretty heavy. Split dollar plans, when people get to the end and they get retired, they get rid of their split dollar plans. In the past, the only way they could get rid of them was stop paying the premium and just lose everything, or take the cash value if it was a whole life or a UL. Well, a life settlement can return as much as 25 to 30% more than a cash value. So this is why a client will sit up very, very straight in their chair when you start talking about life settlements. And you don't have to get complicated. It's real simple. Hey, Irvin, do you have a life policy that you'd like to get rid of? Oh, you do? Okay, fine. Here's what we can get for it. You just made a life settlement sale. It's that simple. Oversimplification, but you got my point. It's not complicated. It's easier than writing an annuity and less underwriting than writing an annuity. So again, who are prospects? Well, again, the sweet spot is anybody who's 70 years or older and has a policy of 100,000 or more. And they will combine multiple policies and look at it as a package. It doesn't have to be, it could be 5 policies equaling 100,000. They'll still look at it. It's possible to go down as low as 65. And it's possible if somebody's in really, really poor health to even go below 65. So anybody that wants to get rid of their insurance policy, whether they know it or not, they have a vehicle called life settlement where they can sell it. Now, what do you need to know to sell it? Well, it's real simple. You need a life insurance license. Most of you already have that, or you're going to have it very shortly. Other than that, you just have to know what needs to be done. So after you find the group of people that you're going to be talking to, whether it's, like I said, key man policies, split dollar policies, deferred comp policies, executive groups, anytime anybody might have a benefit. I've sold a couple life settlement policies. The smallest one I sold, I think, was I think it was somewhere around 350,000. I only made about $3,000 on that one. I sold one at 500,000, made 15,000 on that one, and I sold one at 1.8 million, and I made 30,000 on that one, with less work than an annuity. So after you identify the prospect, what should you do? Number one, call me. Why would you call me? Well, because I'll walk you through exactly what you need to do. Once you've identified a prospect and we discuss it, then what you do next is start collecting information. Because remember, this is a reverse underwriting. So very similar to the information that you take for a life app, you need to get for life underwriting for a life settlement. We get all that information. I work with you. We submit it to a life settlement underwriter. And the underwriter that I use farms it out to anywhere from 4 to 6 different companies. Now, you've seen these on TV. The Peachtree commercial, where the old couple's talking about getting rid of their life insurance policy. That's a life settlement. The Covenant advertisement that you see, same thing. That's a life settlement. So they're right there under your nose, but if you never had it pointed out to you, you wouldn't know. Every single person that owns a life insurance policy can be eligible to turn it into a life settlement. Now, one of the questions we get all the time is, well, okay, wait a minute. I know a lot of executives and they retire, but when they retire, they have all term insurance. They don't necessarily have cash value, a whole life or a UL or IUL. Well, if a term policy is convertible, in other words, a life policy is a term policy, but it can be converted into a cash value product, that's definitely a possibility to be a life settlement. There may even be, and we are actually examining this now, there may even be companies that have term policies that are not convertible that can be turned into a life settlement. So this is why I always say, if you have a prospect, call me. Let's go over it. One phone call could be worth $5,000, $10,000, $15,000 to you. Okay, we got all the information. We had already identified the prospect. I helped you with it. We get it in, goes into the underwriting. The average underwriting time is anywhere from 30 days to 120 days. So this is not something that you ought to be spending a whole lot of time on. This is ancillary business. This is business that you want to know how to do it, but you don't want to be out there just trying to prospect with it because the processing time is too long when you first get started in the business. Now, after you've been in the business longer, you might do more work in life settlements. That's possible. But do your other work, do your final expense, do your family planning, do whatever market you're in, and just keep your eyes open for prospects where a life settlement will work. So what are the rewards? Why does somebody want to sell their life insurance policy? Sometimes it's just because they want to eliminate premiums. Their children are raised, they're older, their health is failing. They'd rather take that money and go on a cruise, enjoy life. They don't want to have to pay $10,000, $15,000 a year in premium. They need to create wealth. Maybe it's because they want to take care of hospital bills, medical bills, or maybe they just want to create wealth to leave to their family. And rather than the possibility of losing the policy because they live too long and they can't afford to pay the premium, They may sell it as a life settlement to create that wealth up front. As I already stated, a life settlement could be as much as 25 or 30% more than what they could get out of the cash value if they cashed it in. So why would an agent do it? Well, first of all, you would create a solid client like you can't even believe. This would be more like your mother bragging about what a great insurance agent you are. Because you now taken somebody who would never see the value of that life insurance policy because they have to die for anybody to collect, who now just gets $100,000. The one that I made $30,000 on, that family got $275,000 in cash. You think they were happy? That father or mother or whoever in the family is going to tell every single person in their family about you. You did it. Doesn't matter that you had no idea what you were doing, because for the first couple, you won't understand them. Doesn't matter. But you did it. You were smart enough to be here for this introduction, and you were smart enough to recognize that you can help a client, and here's a possibility. Let me look into it. And then you were smart enough to get it done. These are annuity-style commissions. So the percentages can range anywhere to 4 to 7 or 8%. A lot of varying factors. When we have a case, we examine that. We'll tell you exactly what the commissions will be before we even send it to underwriting. But there's no flat payment. It's less work than an annuity. Again, all you need to do is fill out forms very similar to an application with all their health information and turn it in. And the other thing is, I'm going to be here to support each step of the process. Tony knows a lot about life settlements. He's going to be learning more as we get into it. He's always going to be around to coach you and to be there and answer your questions. The best process to write a life settlement is exactly what I outlined. Find a prospect, call me, we'll discuss the case, and if it has merit, I'll tell you what the paperwork is and to start getting information. If it doesn't have merit, then I'll check with one of my underwriters to see if I'm right or not. And if it doesn't have merit, then I'll tell you that, so you don't have to waste time to find out. Because like I said, 2, 3, 4 month process of waiting for this to go through underwriting, you don't want this to be your primary business. If you wrote one of these a year, this is your bonus vacation money. Make your living selling your main products in the markets that you're most comfortable in. So I want to give you my contact information. You can reach me anytime. I travel quite a bit, but if you get in touch with me, if you call me or you send me an email, I'll be back to you within 24 hours. If I'm not, that means I didn't get the message. So just call me again. But my cell phone number is 239-877-3318. Let me repeat that. 239-877-3318. Best email is mddomico. So that's mddomico@gmail.com. They're the two quickest way to get a hold of me, or you can call me on Voxer. I monitor it. I'm not on that much, but I watch what's going on all the time. Or just call Tony or your vice president. However you need to get in touch with me, just get in touch with me. So I want to wish you good prospecting, and I'm now going to open up the questions, and I'll answer as many questions as Tony lets me stay here for.
That was awesome, by the way. I got a handful of questions.
Please shoot. Your questions are going to be more valuable because you know what we're talking about.
Yeah. So a couple of them. Number one is, are there companies that won't permit for a change of ownership of the policy? Because that's honestly what it is, right? It's another company becoming the owner, the beneficiary, and the payer of an insurance company. Are there any insurance policies from companies that just outright won't accept the change of ownership? Number one.
Okay, so you pointed it out that insurance policies now have a question about ownership. As you well know, that question is only about 5 years old.
Okay.
So any policy prior to that, the answer technically is no. You can transfer any policy. However, that doesn't mean all the companies will cooperate. And this is another reason why I tell people, do not try to do this as your primary business in the beginning. It will kill you.
Okay.
So the answer is most companies won't stop you. Some companies may try to throw roadblocks in front of you, but that's what myself and the underwriters I work with, that's what we work on, is getting past those roadblocks.
Gotcha. Second question, is there anything that a suicide could prevent for it paying out? Like, I'm just thinking outside the box. No?
Nope.
Okay.
As long as the policy's past the contestability period, which most is 2 years, as everybody should know. Some states still have 3 years, but other than that, if it's a legitimate policy and the claim is not in contestability period, it has to be paid. Now, there are court cases where companies try to fight that. They've lost every single one, but they'll still try to fight it sometimes.
Gotcha. Okay. Does anybody have any questions? This is a great opportunity, guys.
Well, again, let me encourage everybody. If you didn't get my phone number down, I'm on all the TKO boards, so my number and my email are easy to find. But again, it's 239-877-3318, and it's mddemico@gmail.com. Like I said, call me anytime. You'll find that I love helping new agents. Just as Tony mentioned, I just had my 50th anniversary in the industry just past February. So I really, really am excited about TKO and what Tony's doing, because Tony and I share a vision. It's his vision, but I share it with him. And that is to bring this industry back to the customer. Bring this industry back to a relationship between a professional and an insured. And TKO is all about that. So I'm honored and really, really privileged to work with Tony. And that's exactly how I'll feel about working with each and every one of you.
Awesome stuff. And guys, remember, the easiest way to get contact numbers as well too is Pingboard. If you're licensed, you would have gotten an invitation from me to join Pingboard. That'll give you full access to seeing the entire hierarchy, uplines, downlines, sidelines, phone numbers, emails, everything is there. Mike is really the go-to person for life settlements. He's the go-to. The reason I thought it was advantageous for us to have this type of training is because if you're out in the field working final expense, you have no idea how many people are purchasing a final expense policy because they have either a term insurance policy that they've had for 20 plus years that's about to expire, and they just want to make sure they have something in place for when, post that expiration, or they have a permanent policy that they weren't funding properly, and unfortunately they can no longer afford that particular permanent policy, so they're looking for final expense because of the same reason. They want to make sure there's at least something in place there. And those types of policies, permanent policies, other companies like Peachtree, for example, that's what they do, right? They'll buy out that policy. Term policies, a lot of people don't know this, but have conversion where you can convert it from a term to a permanent. So if we have the licenses and we have the skill set with Mike D'Amico, and then we have companies that are willing to buy these insurance policies from them, the client gets to cash out on the death benefit in huge sums, and you get to cash out on commissions in huge sums. It's literally like reverse underwriting. They're looking for people that are unhealthy versus people that are healthy. And that's a beautiful place to be when you're working the final expense world. When you're working that, guys, that is a great place to be. So I look at the list of agents that are on right now, and there's some of you guys that are buying, a few hundred to a few thousand on a monthly basis in leads, primarily for final expense. Some of you guys focus so much attention in the final expense game, Now you have another tool to bring to the table. The same way when I'm working, you know, my term insurance world, my IUL world, I'm always trying to find annuity cases. It's very seldom do I get into an initial meeting where it's only about an annuity. Usually it's life, and then I find the annuity money. Now you get a chance to say, okay, I'm going after a final expense case. I'm going to try to upsell to a GUL if they have the budget for it. But I'm going to also ask the questions to see if I could find a life settlement case. And if I find it, I'm going to bring the specialist with me. That's Mike. And we're going to run that meeting together. And here's another great part to close it off. Some of you might say, well, does that mean I'm going to lose the final expense sale? Not really. You could, once the person receives the cash, you can show them how they can single pay the final expense side of it and know that whatever portion they single paid into the final expense is a death benefit that they're going to leave behind for their family that has a terminal illness rider, a long-term care rider, and it's at full value. So you can still come back towards the end and final expense sale, and they still have that liquidity in that cash. Does anybody have any questions about that?
Well, two things I want to add real quick. So first of all, I like the final expense video. As I've said it a few times, Tony, and I don't blow smoke. I really did enjoy it because it's so obvious a spot where life settlements can fit that most people wouldn't even think of. So that was brilliant. I liked it. But two things about life settlement I want to throw out here is don't take the wrong idea either. This isn't just for people who are uninsurable, because now this is advanced underwriting, and I don't want to get into technical stuff because Tony will get mad at me. But I have taken a 75-year-old woman, used a life settlement to get rid of her expensive whole life policy, which had high CSO tables, which if you don't know what they are, don't worry about that. Life insurance was more expensive per thousand prior to 1990 than it is now. That's what the CSO table is about. We sold her more expensive policy, bought her a brand new policy when she was 75, 76. So she got cash from that, bought the new policy, and at 83, I sold the new policy, and that's the one I made $15,000 on. So life settlements aren't for people that are just ill. If they're ill, they get more. But you could actually use it to get more expensive insurance, take that money, and whether it's a final expense policy or another estate planning policy, which we were doing, buy a new policy. So life settlements have a whole lot of value. Plus, not only if you sell that life settlement when you're doing final expense, not only you don't lose the final expense policy, you may end up writing an annuity because they got to put that money from the life settlement somewhere.
There it is. I was literally just about to say that. They get their cash that they need, and maybe all they needed was to cover the final expenses. Now they have that cash that they need to reinvest. Now you have annuity opportunities to create pension opportunities to confer deferred income, estate planning. I mean, there's so many opportunities there, and your license lets you do this. I mean, I'm looking right now. I'm so glad Tasha Sims just responded back. This is awesome. The reason I'm so glad that Tasha responded, because Tasha, I'm finding out is a heavy hitter in the final expense world. She's buying $250. She's buying $250 to $500 on a weekly basis in final expenses. She does this full time. She's making $10,000, $15,000 on a monthly basis in the final expense world. And now she has that tool to be able to say, hey, wait a minute, let me ask you these last final questions. And the questions you're asking, do you have any existing life insurance? Tell me about that policy. Is it a term policy? Is it a permanent policy? What company is it with? Do you know if it has a conversion rider, if it's a term policy? And if it's a permanent policy, why are you getting rid of it? Right? Like, those are the opportunities you're looking for to find these $5,000 to $10,000 commissionable type products, right? Rico asked, go ahead.
Tasha, if you're doing that type of volume in final expense, I would recommend taking a couple hours and looking over the ones you've already written too. You may have stepped over, because the problem with life settlement, if you don't understand or don't recognize it, you don't see it.
Correct.
And let me tell you something. Let me tell you a secret about us as salesmen. We hate the word no. So if we're not comfortable on a subject, we don't ask the question because we don't want to get a no. But Tasha, look over your final expense policies that you've already placed, and you may have a life settlement sitting there that you're not even aware of.
100%. And Medicare guys, if you're a Medicare agent, same exact thing. You have a book of business of elderly clientele that may have policies that are about to expire or permanent policies that they're having struggle with making those premium payments. Those are the kind of conversations that you want to have. You know what I mean?
I had a young agent. I'm not going to say who it was because it's unimportant. Who called me up a couple of weeks ago, and he says, Mike, he says, tell me about life settlements. So I spent 2 different phone calls, about an hour total with the guy, and went over life settlements. And I know where he lives. And I says, you know, you have some major corporations just on your doorstep. Do you have any contacts in that city? He says, oh my God, yeah, I got lots of them. I says, well, here's an idea for you. And this is like Carlos Colon talks about with his annuities. I said, go into these corporations. They have executives retiring all the time. They would love to have you come in and explain that part of the benefit package that your corporation, this great corporation that took such good care of you has, is you now can sell that life insurance policy for money. And they'll just sit there looking at you. What the hell are you talking about? Excuse the French. And this young guy, I don't know if he's done it yet. I think he will. He's going to go around and talk to these corporations and maybe have a little symposium, seminar, whatever, with some of the executives as they get ready to retire.
Yep. I'll tell you, anybody with those types of connections, the thing that you want to do, I used to do this when I was at Northwestern Mutual, is you hold a board of directors meeting and you invite them to a place for dinner that's really nice, like a Capital Grill. You send them the invite and you invite them, hey, I'd like to invite you to join my board of directors meeting. Okay, it's going to be a Capital Grill. All expenses are covered by me. Would you care to join me? Oh, and by the way, here's the list of all the people that are attending. And as long as you have a list of high identity individuals that they know, they're going to want to come to that dinner just for networking purposes. Honestly, that's really why they're coming, for the networking purposes. And obviously the free meal. Now, you can't do it at a Chili's or an Applebee's. You got to do that in like a Capital Grill, a Ruth Chris, a Burns. Like, you got to do that at a high spot. Is it going to cost you some money to host that kind of a meeting? It will. It'll probably cost you, you know, depending on how many people you invite, it could be $1,000 that it'll cost you. But to be around a table with people that have that kind of influence, letting them know that you're seeking their guidance, their counsel, and educating them on some of the services you offer, you'll open up doors like no other. I used to do those, and there isn't one event that I didn't host where I spent $1,000 at least and didn't get back 10 to 15 in my return, just because I got into those markets. Let me
throw an idea out, and this is just for TKO agents. I'm cheap. I have no problem spending money when I feel like it, but I always hate spending money up front. What I used to do is, and the guys and gals here in Florida, this is absolutely perfect. These gated communities, they're starving for quality speakers. They're tired of hearing about Medicare. If you got into these gated communities and for the cost of coffee and donuts, sit in front of 35, 40 people, I guarantee at least one of them will be a life settlement sale. Now, after you have that money, then that's when you do the seminars, because now it's not your money you're spending corporate money. Mm-hmm. But this a way for some of the new guys to get started in this market. Don't let spending $1,000 for a seminar scare you. There are other ways to do it. Civic groups, Rotary, civic organization, they're always looking for speakers. These are usually some of the best business people in your community. And you don't have to pay anything for their, I'm sorry, go ahead.
That's another one. I used to do a lot of healthcare networking groups. Look online for like networking groups for doctors or nurses, nurse practitioners. They host monthly luncheons because they like to collaborate about different medical ideas and different medical updates and stuff like that. You start networking in that group and building some decent rapport with these guys. You'll start to see a lot of them are like, I know nothing about finances, but you're here. Right. And why are you here? Right. Well, I'm here because I specialize in working with people in your industry, and I help with medical malpractice protection programs. Look at the verbiage I just said, right? Medical malpractice protection programs. You know what that is? That's permanent insurance. That's permanent insurance or disability insurance for surgeons who are worried about developing a tremor in their hand and losing their ability to practice. But if you're seriously interested in putting together some of those types of seminars, reach out. I have no problem helping you with them. Mike has no problem helping you with them. You don't want to target just one thing, right? If you're going to do it, if you're targeting the wealth, you're going to target probably annuity conversation, estate planning conversation, life settlement conversation, and, a 20, 30-minute intro on all of those services. And that could be a killer. Honestly, it really genuinely could be. So Medicare, just to close off here, guys, if you're a Medicare agent, you have to get your AHIP certification done before the deadline. Okay, that's a course you need to do on an annual basis. If you are, just understand TKO is now in the Medicare space. We just finished our AHIP certification. We're literally doing our contracting right now with the carriers. We're gonna be in that space. Why? Because final expense agents come across Medicare opportunities all the time, right? And Medicare agents always come across final expense opportunities all the time. And now we just threw in the third curveball, which is the life settlements. So the reason I'm mentioning this now is because if you're a Medicare agent and you're looking to do Medicare sales inside of this platform, make sure you reach out to me, because we gotta begin your process of contracting. If you're not a Medicare agent, but you're health licensed and you want to do Medicare, as long as you're willing to do your AHIP certification program, reach out to me as well too. It's about $125 program, $150 program, but I do have a discount for it. So you're probably going to spend like 25 to 50 bucks for it, but it'll get you prepped to be able to do Medicare sales, which again, final expense guys always come across Medicare guys. I think we probably did in the last 5-6 months, we probably done 12 or so, 24 or so Medicare sales just because of a final expense sale. And it might not pay a lot, but it builds, that stuff builds 500 here, 500 here, 500 here. And more importantly, you become the agent for all of the insurance needs that household needs. So now you don't have to worry about losing that business to a competitor. Because I promise you, if you don't do their Medicare and somebody else does, if that other person does life insurance, you're going to be constantly competing to lose that business, because that guy is always in your client's face, renewing their Medicare and saying, hey, what about the final expense? And you have a chance at losing it. So if you guys don't have any other questions, I'm going to let you guys get going. Okay. Interested in offering. Yeah, cool. Definitely, Tasha. I'll get you in contact. Does anybody have any questions, any statements, anything they'd like to say before we finish off?
I'd just like to say thank you for everybody for their time, because I know how valuable your time is. But if you have any questions, please call me, send me an email. If it's not on life settlements, I guarantee I either done it or I'll tell you the reason why I don't do it. But I'm very, very interested in giving you all the resources that Tony's trying to build for the platform. I want to support those. So let me know how I can help you.
Mike, do you have a headshot picture?
Oh, yeah, I got all kinds of stuff. I just don't have them in front of me all the time. You want it? I know you want it for the website, right?
If we could, I wouldn't mind creating a life settlements department there with your info, a little bit of your background, your agency name and stuff like that.
I don't want to scare all these good young agents,
Yeah, well, life settlements is a great place.
You carry a rate book. My rate book was still made in stone.
No, mine's online. Mine's digital in my phone.
Because I started as a debit agent. So.
Oh my goodness. All right, guys, have a good one. Be blessed. I'm going to stay on for another minute. You guys are free to hop off. If anybody has any questions, I'll be on for a couple more minutes. Thank you so much, Mike. I appreciate you, bud.
My pleasure.